Hello all, welcome back. I am your host, Charles Musgrove of the Answers That Count podcast. Thank you for joining us for another great show. Hey, do me a favor, hit the like button, hit the subscribe button, hit the bell, the notification button too. That way you'll be notified when we post another video. We're on all your favorite podcast channels. Whether you're listening or watching, make sure that you subscribe to the channel. You know what we do. We try to bring those knowledge nuggets to you on a weekly basis. We've got people from all different sectors of business, and today we are really honored to have Myles Bradley with Capital City Bank with us today. Myles, thank you for joining us.
Thanks for having me.
It's going to be a great show. Myles we almost gave him a promotion before the show got started. He is a vice president with capital assets with Capital City Bank. Now, Myles is located over in Tallahassee, Florida, but Capital City, they have branches located in the Southeast. So, Myles, tell us a little bit about your expertise, what you focus on with the bank, and you can even drop in some great information about Capital City Bank.
Well, Capital City Bank, we just celebrated our 125th year. So we have a book out. I think you can download it on Amazon. And what I do is I specialize in working capital for businesses, and that typically means lending on their accounts receivable or inventory.
Right.
I also run the factoring portfolio, and we just started a fairly new product in the banking world called supply chain finance.
All right, so I'm not a banking guy. I'm an accounting guy, a CPA, but I deal with businesses that they're getting loans right now. They've had the PPP loans. It looks like you've been in competition with the federal government recently, with the federal government just putting all this money into the economy and making it really easy for businesses to obtain loans. With the PPP loans, the EIDL loans, now they've got the ERTC credits. So there's just a lot of, I'll call it not free money, but there's a lot of easy money that's out there right now that is coming from the federal government and not the banks.
Yeah, back in April and May when the first round of PPP came out,
right?
It was a pretty big impact to my area because that's what I do. You know, we lend on businesses' accounts receivables, and for you who don't know what that means, like you sell something to Walmart, it takes them 30, 60, 90 days to pay you.
Right.
We finance that period in between when you deliver the goods and services until you get paid. And so with the PPP first round, the first round, there were very few restrictions at all. And the federal government did put out, they put out basically 2.5 months worth of working capital for most of these businesses. So it did slow down my department, but it also increased the credit quality because we saw the account debtors, that would be the client's client, like the Walmart in this example, they sped up their payment terms, right, and there was less collection time. So there was some positive impacts to my area too. But I think it helped the businesses, most importantly, stay open. But yeah, there was free money floating around that definitely competed with some of the banking products.
Yeah, so you see we've had a lot of discussion on the show here actually about where the economy is going. We've had a professor from FSU, economics professor, talk about the economic impact of all this money that's being flooded into the market, what's happening to our GDP compared to the annual deficit that we're incurring. So we're spending, and this is not anything new for 2020 or 2021, but we're spending, as a federal government, as a nation, we're spending more money annually than we're taking in. So we're running a deficit, and when you compare that to the GDP, it's getting worse. It's not getting better. So if you look at I like to say in 2020 was the year that we've added $1 trillion to our normal day conversation. It's like $1 trillion used to be what a million or 100,000 was back in the old days. Now we're just spending $1 trillion per surplus per stimulus plan, and we've got this $1.9 trillion stimulus plan that's queued up right now. So where does it stop? You've heard Janet Yellen talking about there's going to be something big, something even bigger than the 1.9 trillion, as if that's not big enough. So where do you see that and this is kind of a macro look and kind of out of your department at Capital City Bank, but what happens on the macro level? What do you see as a banker that's happening to the economy and the debt and the spending that the federal government is doing?
Well, it's clearly reduced the cost of interest, the cost of funds, and you can see that impacting the residential market.
Right.
I mean, the housing market's on fire. I've never seen it like this. You know, I wasn't a banker during the last downturn, so I didn't experience that. But I mean, this is the hottest I've seen the residential market since I've been a banker. What they're doing differently this time, you know, they have you have to support your revenue reduction for this PPP round. So I think they're trying to, you know, rein in some of the government aid a little bit. So you have to prove that you're in need. Back in the beginning, I don't know that not doing anything wouldn't I don't know what that would have done. Because we didn't know how the virus spread. They sent people home. You basically shut down businesses by force, and I think that those businesses actually going out of business, going into bankruptcy, laying off people would have probably been more detrimental to the entire economy. So I think that the second round of PPP is better. It's targeted for businesses that need. I think that should be the approach going forward. I don't know what it will be because, you know, we have a new administration, but I think the targeted really impacted industries, and especially the ones that have kind of been forced to shut down by the government or restrict their sales or
Right.
capacity. I mean, that's a government order. That's basically like a taking. Like, give me
Yeah.
the domain, you shut it down. So the government, if they shut you down, they have to compensate
Yeah,
you.
I totally agree with that. And there's a
But it is a risk for the economy. You know,
Yeah.
all the debt we're taking on. I mean,
Yeah.
I think that's fair.
Yeah, and there's not to get into the veer off into the political discussion on this, so that you can take sides one way or the other, but the fact is that there's a lot of money that's been flooded into the economy, and it's coming from the federal government, which means that technically has to be paid back in the future. So then the numbers just get so huge that it really brings into doubt whether or not we'll be able to pay that back or when, and what happens to the strength of the dollar, because as you know, the dollar is backed by trust and hope and faith, and not a gold standard or any other standard. So
You did do a podcast on Bitcoin, right?
we have
If you lose
right.
faith in the dollar.
We have done that. So we have talked about Bitcoin, and you know what really happens when people get worried about the security in the markets, and we're looking at these bubbles right now. They go to scarce assets. So that's really where a lot of the smart money is going now, is in scarce assets. So scarce assets are real estate. I mean, there's only so much real estate, and then prime real estate, and then a lot of people call Bitcoin a scarce asset, even though it's a digital. You can't touch it. It's a digital asset. So yeah, I mean, I think that is really makes people pay attention to what's going on in the markets. We've got so many bubbles right now. We've got I think you'll acknowledge, we have a debt bubble. We've got, as you said, a housing bubble. So you look at the housing prices, especially in the state of Florida. I think at least in Northwest Florida, we've seen a record year in 2020 with the demand for housing and the pricing for housing. I mean, they're fleeing other states, coming to Florida, buying real estate sight unseen. And it's not like they're buying a $10,000 lean-to. They're buying $1 million homes in the state of Florida without even stepping foot in them. So the demand is really just off the chain when it comes to the housing market. And Myles, we talked about this before. There's a definite correlation between the cost of money, interest rates, and that housing bubble.
Yeah, I mean, I'm not willing to say it's a bubble yet because, like you said, there are people coming in from out of state, especially South Florida. I have a buddy that does a similar business that I do down in Delray Beach, and he was telling me just about the influx of New Yorkers, New Jersey, coming down, buying property. One, that's most of their dreams their whole life anyway, right?
Right.
And then all the restrictions, and, you know, people for the first time, that I can remember are fleeing urban areas. So, I don't know that it's a bubble yet. It could be, but it's definitely with with the cost of money making your ability to buy more house, right, and the demand drives up the price. I definitely think that there's inflation risk.
Right.
That's probably the biggest immediate risk. Is there's going to be some inflation risk, and is there going to be the future demand to support that, or is it a bubble? I hope not, because we saw the bubble last time. So I'm hoping that it's just the increase of people wanting to move to Florida for the weather and maybe less restrictions in some other places so they can do more.
Yeah, we've got several factors in play now, and a lot of it's just driven by what happened in 2020 with COVID and with like you said, the government forcing these businesses to shut down or reducing their capacity. In a lot of states, they're still living through this reduced capacity at a minimum. So that forces people to leave and go to places where they can earn money, where they can earn a living. So it's, I think that if you had it all to do over again, would there be the forced shutdown that we went through in 2020? I don't know. But if the government forced that, then like you said, it really makes sense for them to come in and help support those businesses.
And we look at it kind of with our southeastern goggles, right? But I have some participation loans with some banks out west where their states were restricted much more than Florida and Georgia,
right?
And you can see from some of their clients' income statements that the government shutdowns, it looks a lot different on their income statement than maybe someone in Florida and Georgia. And so there are parts of the country where, it's been drastically more impacted than our region. And I think we take that for granted sometimes. A lot of businesses didn't fully shut down in Florida, but they did in a lot of states. And, we had to do something. So I think the first round of PPP was good. I like what they've done with the you have to support your revenue reduction, and that you were impacted. They made it much more challenging to get the PPP and process it this time, for sure, from a bank side. But I think that as a country, we're going to see if these people are moving here, and the home demand also, I think we talked about it earlier, could be that people were cooped up in their house and just getting tired of seeing it, feeling cramped. Maybe both spouses are working from home, and they say, I can't do this, and so they just want bigger house. You know? I don't know. We'll see. I imagine within the next year we'll have a pretty good idea.
Yeah, I think there's a lot in flux when it comes to real estate. We see what's happened in the personal residence, and then we see there's an impact over on the commercial real estate as well. So as those people are fleeing the big cities, then what does that do to the commercial real estate market in those big cities?
I think the big cities are going to have a really hard time rebounding, like the New Yorks, the LAs, the Chicagos. If you're paying for real estate in Manhattan, you're paying to be in Manhattan. And if your people can't go in the office, and you're probably getting taxed higher, you're paying a higher price per square foot for sure. And everybody is forced to work from home, and all of a sudden you notice, well, we're pretty efficient doing this.
Yeah.
Are you staying in Manhattan? Probably not.
Yeah, I think that's we've seen, just anecdotally, we've seen the news reports on people leaving New York. We've seen them leaving California. There's been a lot of big players that have left California, and they're leaving because of the tax situation, and compounded with the restrictions that have been placed on them in those states. So I think we'll see that continue. And
I think Florida and Texas, Texas is clearly the beneficiary of like a Tesla.
Right.
Florida, Rick Scott, when he was the governor, spent a lot of his time recruiting New York companies down. And that could also drive up, it's driving the demand for houses. I think the CRE market is going to look a little differently, because some people are going to say, hey, I don't need this prime real estate and this much. I have a client through a participation in Park City, Utah, and they were paying something around $15,000 a month for 12 offices. Park City's a pretty expensive place, but when they started working from home, they decided they got with their landlord. They did a sublease with a tenant, and they kept 2 offices and a boardroom.
Right.
One so the assistant can be there to check mail, process anything that comes in. one for a flex situation, like someone needs to come in, they have construction, the in-laws are in town, they can't work, whatever,
Right.
and then a boardroom for client meetings, and you know
Yeah.
they love it, and it saved them $10,000 a month. So I think it'll look different. And
Yeah.
some, you know, there's a theory that with the CRE market that there will still be the demand because people are going to say we're going back to the office, but we need to be spread out more.
Right.
We need, you know, personal bubbles. So,
Right. Yes, I definitely see that it's going to change. There's people are going to adapt to that, and I think the scenario you just described, where they have the access to a boardroom, they have flex space so that they can come in and work. They still need that physical presence of some type of office, but they don't need as much room as they had before. They don't need all the dedicated offices they had before, or they may make the decision, like you said, that they still need an office setting, but they need to have their bubble space. So they don't need to be in a group room where they have a bunch of people in one room on top of each other. So you can see that definitely changing. The bigger the office, the bigger the commitment that you have, probably the more risk that is of changing.
I mean, I'd imagine there'll be a smaller appetite for like your strip centers getting financed. You know, just because there are very few credit tenants left. Of course, everybody wants a Publix, right?
Right.
But who goes in those side ones? You know, it's probably not a credit tenant. It's probably a mom and pop shop, and you know, they were competing with Amazon and Walmart and all these places already. And then COVID happens, people leaving the house less. Some people are getting more comfortable buying things from Amazon and Walmart online. So I don't see that coming back as quickly as maybe a office type space, you know, where you can just spread out, or you may sublease it with another company where y'all can share a boardroom.
That's
you
true.
know, and just have a couple dedicated offices. But so I think there will be some office space demand still. I don't know about the strip centers. I'm not a CRE specialist, so I'm not going to speculate too much, but I would think that would have a reduced appetite for sure.
So you're helping the bank right now process these PPP loans, the round 2. So the PPP loans have been very popular, the SBA 504 loans and the 7A loans. So I know they've changed even the requirements on the 504 and the 7A loans to make them, again, easier for the borrower to obtain those loans and to reduce some of the fees on that. So let's go through some of those. Let's start with the PPP round 2. So let's put those bullet points up on the screen, John.
Well, you know, what I've seen from PPP round 2, we had a bunch of people that got the first round won't apply. Not everybody qualified because they didn't have the 25% revenue reduction. And how that worked is you could pick any quarter and compare it to the previous year. So all you needed was one quarter, like Q2, to be 25% reduced from Q2 in 19 from 20. Some people, you know, you saw them have great fourth quarters and maybe not lost money for the year, but they still had a 25% reduction in that quarter.
Right.
I think demand is slightly higher than we anticipated.
The demand for PPP round 2?
Yeah, and it's also been a lot more difficult because the first round, the SBA basically had no firewall. As you know, people in the industry saying, if you submitted it, you attested to it, and you put in your tax ID and your payroll information, you got through. The second round, you hear about the people that bought Lamborghinis and all this with their fraudulent money, so they tried to stop that, and it really slowed the approval process. It caused a lot of errors that, some of them were correct. Some of them, it says the business tax ID is submitted as a social, and it's the exact same number, just the hyphens in the wrong place.
Right.
And that could have taken a week to get cleared up because the SBA clearly isn't staffed, probably nor should they be, for this type of demand at one time. But, it's been much more difficult. They have restrictions on certain types of industries, and mainly it's going off of your NIC code. So, if you're a 72, We're your hospitality, whether that's restaurant or hotel. You get 3.5 times versus 2.5 times. If you have a 52, you could be like one that I've been working for 2 weeks. It's a pawn shop, but because they're a 52, so are lenders in your NIC code, and the lenders aren't eligible. And to get somebody with the authority to look at that and say, this isn't a lender, they're mainly a jeweler,
Right.
It's been extremely difficult. It's happened, and as I think that the pipeline frees up some of the SBA staff, I mean, it's been getting better and faster.
So when you're this goes back even like it was in PPP round 1, when you said 2.5 times, we're it's still a payroll based program, so it's
Yes.
2.5 months.
Either your 2019 or your 2020 payroll.
Right. So it's 2.5 months of your payroll over those periods that they allow for in the program. So now they've allowed for, if you're in the hospitality based on your NIC code, then you're able to get 3.5 months.
3.5 times, yeah, and it's pretty substantial in some cases.
Yeah.
You know, we've seen a lot of the hospitality industry, and you know, some in the hospitality industry are event planners,
Right.
and those
There's
type
no
of
events.
venues.
Right.
And the guy told me, you know, I built this building. We were having 2 events with 200 people a week. And I got I got licensed and to move into this new building, start doing this in February of 2020. Well,
Yeah, that's when
he's
it all
like,
shut down.
I put all my eggs in this basket to have a virus come up, and nobody wants a 200 person event.
Right.
Nor should they probably right now, but you don't think about those type of things when you think about the restaurants and hospitalities. But you know, people, caterers, right? You know, with these big venues, some of these people work 4 or 5 nights a week doing these things, and now you have a drastically reduced audience.
Yeah.
And maybe once every 2 weeks. So
this is a big change.
it is nice that you are able to help. As frustrated as I can get with the SBA, when you see someone that, you know, clearly needs it, no fault of their own, restrictions in place, and you can help them and know that they can pay their employees, that does give you the motivation to, you know, keep plowing through these.
Absolutely.
As frustrating as it can be.
Yeah, it's definitely is needed, and it's necessary for. There's a lot of businesses that are suffering, and I do give credit to the program and how it was set up. That money is designed to be used to pay employees. So what you're doing is you're keeping paychecks coming to employees instead of them being unemployed and lining up at the unemployment line.
Yeah, and one thing I wanted to point out, a lot of sole proprietors don't think they're eligible because it's just them.
Yeah.
But they are, and you know, they can get 2.5 times their net income on Schedule C. And it's shocking, you know, sometimes if you run across somebody that you may work with normally through it, and you're like, hey, I don't think I've seen your PPP app. And they're like, well, I didn't think I qualified. Like, how many people actually don't think that they qualify that may? And so with this podcast, you know, hopefully I can tell some people who are struggling, you may qualify. You know, contact your banker wherever you are. I mean, it could be impactful for keeping your business afloat, and you probably qualify unless you're a lender or, you know, some ineligible. They made even some nonprofits eligible this time that were not eligible last time.
Right.
The only one I've seen that's not eligible is a 501c7, which I've seen one of those, but they've opened it up because normally nonprofits are not.
Is a C7, is that a PAC or what is a C7?
The C7 is a member-owned club.
Okay.
And so, you know, normally the nonprofits can't get SBA loans, like churches,
right,
and these things. But the SBA's opened up the 7A requirements because PPP technically falls under a 7A. So that during these PPP rounds, you can do nonprofits. You know, there's some commercial real estate stuff that normally, I think, you know, the SBA tries to focus on owner-occupied type of.
Right, for the 5. So broad brush, the PPP program round 2 is based on payroll, either 2.5 or 3.5 months of payroll, and you have to demonstrate a decline in business from 2020 to the comparison period in a previous year.
Same quarter.
Same quarter both years. And the total amount that you can qualify, is there a limit on that?
Yeah, so round one, if you didn't get a round one, you can apply under round one now, and that's 10 million. If you're going up for a second draw, it's capped at 2 million.
2 million.
2 million.
So PPP round 2 is capped at 2 million, even if you did get round 1.
It's only capped at 2 million if you got round 1.
Okay.
If you didn't get round 1, you can apply under the first draw requirements, and you could still get 10.
Okay. And what are they saying is how long this money is going to be available?
They've only been releasing it once a week. And last week there was 100 million of, I think, 284 billion. Sorry, that's a billion, not
a billion. B.
But last week, all these errors that I've been telling you about, these holds.
Right.
I read that Wells Fargo, Bank of America, and Chase, they submitted, of their submissions, which are hundreds of thousands of applications, they have between a 30 and a 50% error.
Wow.
So we were at $100 billion last week, with the big boys having a 30 to 50% error. So with that, I imagine over the past 10 days, they were released it Sunday as of today. I couldn't see how we're not over 150 to 175 billion. Because I think there'll be a pop, because they let some lenders certify some of the smaller errors that you can resolve yourself. And so I would imagine that you're going to have a significant pop over the last week, because some of those errors are getting cleared.
They're getting cleared up. So of the 1.9 trillion, what's the total amount that they're looking at spending in this round 2?
284 billion.
284 billion
is the PPP budget for.
So they're over half. You expect by the end of this week they'll be over half of that.
Yeah, I certainly do.
Okay, so they're probably another month that the money's going to be available.
Yeah, I think it ends March 31st.
March 31st.
But it's sometime in March, so don't hold me to it. Google it. But yeah, it ends in March. But I imagine it doesn't all get used, but a significant portion of it will.
Okay, let's jump to a couple of the other SBA programs, and we've got them up on the screen now, so people are probably cheating ahead. So roll back one, John. So we have the 7A program. The 7A is another program. Just kind of broad brush explain what that would be targeted for.
It's usually owner occupied. It's either equipment or real estate. It's a guaranteed loan, unlike the 504, which we'll talk about in a minute. And it was typically, they'd guarantee 75%. The SBA has said that they will increase their guarantee to 90% as long as their guarantee does not exceed $3,750,000.
So that guarantee is a benefit to the bank. So,
which is probably a benefit to the client, because the bank probably wouldn't make that loan.
Exactly. So it's a float. There's no less collateral requirements on the borrower, but what it does is it most likely loosens up the restrictions that the bank would apply to that borrower.
And they waive the guarantee fee.
The guarantee fee.
And the annual servicing fee for the life of that loan.
Okay, so that's a big deal. So in $1 million 7A loan, what would that guarantee fee be?
It depends on the type of loan, but it would have been anywhere from 1.5 to 3, basically 3.5%, 3.75.
So that could have been $35,000.
Yeah, and you'd pay probably 50 to 75 basis points for your annual guarantee and servicing fee.
Right.
And so it's a pretty impactful number. And part of the servicing fee is waived on the bank to encourage us to, obviously make more business loans.
Right.
So.
Yeah, that's a big incentive, and I know we've got that up there. So the 7A typically is for equipment, and the amortization period on that is a lot shorter. It's 10 years.
I don't know that off the top of my head, but I was gonna say they also with the 7A, something that we typically don't do, but a lot of lenders do. The 7As are used for the blue sky
Right,
financing.
exactly.
I think goodwill's the technical term.
Right.
But if you're buying a company over the asset book price, whatever the premium you paid is goodwill. And most banks won't finance that, but with the SBA guarantee for that, you can make more sense for the bank to lend that if there's a higher guarantee on it. So I think that may help with some acquisitions over the next year for sure.
Yeah, I think that's a good sign. That's a positive sign that hopefully that will incentivize businesses to be sold and even purchased. So that's good. So
And then I don't know if you want to talk about the SBA Express. This is one
yeah, absolutely.
that we haven't done many of at the bank, but you can use it for a line of credit for working capital or a term loan. It's typically been capped at $350,000. They increased it through, I believe, October to $1 million, and they said in October they're permanently raising the cap to $500,000, which I think it's a good thing. It'll help people get money, and they're a lot faster to get, cheaper to get.
So the payback period on that, my guess is that's going to be, the amortization period is going to be shorter than it is for fixed.
I think they're typically around 5 years.
5 years, okay. That's good to see that they're doing that, and I think that makes a lot of sense.
And they've increased the guarantee on that from 50% to the bank to 75%.
Okay, so that incentivizes the bank to make those loans as well.
Yeah.
Good. So we've talked about equipment loans and blue sky, which would be an intangible asset, and now we'll jump to the 504. So the 504 is on real estate, owner-occupied real estate, and
they do equipment too.
They do equipment in the 504, and but that loan is structured different. So explain how that's structured different between the SBA and the bank.
So the 504, it gives the client a 90% funding rate at closing.
90%, which that's most. If you just go out and get a regular commercial loan, is going to be 75%
typically
loan value.
And how it's structured is the bank takes 50% as note A. There's two notes you sign here, and then note B, the SBA takes you out after 90 days unless you do the 504 bridge,
right,
which there's interim lenders that'll come in and take the bank out immediately. And that, I view that as a credit enhancement for the bank and the client, because they get at least 20-year long-term fixed second note
right
on that property, and it's fairly cheap, so you don't have to worry about interest rate risk. You got a 20-year term on that, so your payments are fixed. It makes the bank underwrite a little easier because we don't have to worry about interest rate risk or any of that on the 40% that the SBA takes out in Note B.
Yeah, so those 504, and when I see clients that are possibly qualified for that, I really encourage them to do that, because that is such a great loan program to get in right now. Is the 504. The interest rates on the SBA side are going to be, they're in the threes right now, if I'm not mistaken. Are they even lower than that?
I haven't seen one because I've been pretty deep in PPP over the past 6 weeks, but I know they're fairly low right now.
Yeah, so you get that at least a 20-year amortization for the SBA part, and the rate's going to be incredibly low. Even on the bank, 40% is probably going to be in the fours at most right now. So you're looking at in the threes on half the loan and a 4 on the other. So the rates are incredibly low.
And the second note's long-term fixed. I mean, that's the big part.
That long-term fixed is a big deal. And even on the bank side, I think they're required to at least amortize that over a 10-year period. So that's going to be an attractive payment program as well for the bank side of that 504.
And as you know, I mean, the SBA has been making payments for SBA loans. It was 6 months, and then they extended it depending on when you got it and how much, what industry. There's, multi-level tiers. So, but they extended most of them for at least 3 more months of the SBA making payments on your behalf on those.
Right.
So that's beneficial to the client. It's all, I'd be lying if I was saying it wasn't beneficial to the bank, because it reduces your lien on that collateral. So I think it's beneficial all around.
Yeah.
The 504 is a good product.
It's a good product. So you have to go through is it the CDC that's running those? So there's going to be CDCs in different areas that partner with the bank to make those 504 loans.
Yeah, they're geographically based, so it's going to be different in every area. But you have to work with the CDC on a 504 because they work with the SBA to sell bonds on that long-term fixed rate.
Right. And again, if you're joining us right now, we're looking at the bank side of this, and we're talking about another example of how inexpensive money is right now, and I hate to say it, but it's how easy it is to get loans as well. So we're kind of laying some frontline foundational groundwork for, are we in a debt bubble right now? So let's go to the second part of that slide, John. SBA Express, you mentioned this before.
So this is the multi-tiered, it depends on when you got your SBA loan on how many months they're going to basically make your payments for you and extend it based off the date and the industry type.
So this again is the SBA stepping in and they're not only like pushing out that the payments are being made and forgiving you for a period of time, but they're making the payments for you. So
yeah, and the funny thing on this one, which you'll probably enjoy, I read a notice from the SBA that said basically lenders stop shortening our amortization to match our payment amounts. So I guess people were doing like year notes. So they're like, this is not a grant program. This is a loan program. I was like, who thought of that and actually did it?
Did they get any of those through?
Apparently. It's enough that the SBA sent out a notice. But that made me chuckle. If like somebody thought of that and then said, I'll risk it, and submitted that to them enough that they had to send notice out to SBA lenders saying, stop that.
So that's the ask for forgiveness, not for permission.
They obviously didn't ask for permission.
Yeah. A bit of humor there with the SBA, so, and the creativity of some of those business owners out there in the bank going along with it.
Yeah.
You got to respect that creativity. Anything else highlights here we want to mention?
No, just because it's all variable based on when you got it and what type of business you have. So I'd look up the payments that the SBA saying they'll make on your behalf. They're going to do it for a limited amount more time until their funding pool runs out.
All right.
So if you're thinking about looking into it now, check the bulletin points to see what your business will qualify for the SBA to make payments on your behalf, because they are going to stop it when the funding runs out.
So let's see, is there anything left on the third page, John?
These are
the NAICS codes, which are the industry codes that your business is in. And
yeah, that's what I was talking about. The 72, that's restaurants. That's the SBA's love right now to try to support all those and the hotels because of lack of travel.
Right. So, Myles, we've talked about the PPP program, the SBA 504, the 7A program, the SBA Express loans. All of these are loans that are geared to helping the businesses survive during this difficult time that we've had in 20 and what we've started 21 with. So those things probably have a duration that they're going to last. Is probably you're probably good for 21. I know we said the PPP program is going to run out in the end of March, assuming they spend all the money then, which most likely they will. Where do you see this going? I know the rates are extremely low right now, and do you see the current administration changing those rates, the Fed chair changing those rates?
I don't think you're going to change rates. I think they're going to keep those as low as possible. Janet Yellen, the old Fed chair, is now in charge of the Treasury. She was the quantitative. They say she was the brains behind Bernanke for quantitative easing.
Right.
So I don't see her allowing interest rates to increase in the near future. And they probably should stay low so that businesses can afford their debt and, in this economic uncertainty a little bit. I hope that over the next year, some businesses, you really take off. My business line, the factoring, we help startups and, people that are rapidly growing. And so I hope that, and, some people that had credit problems because we're underwriting their client. And so I think that over the next 6 months, there'll be a lot of people coming wanting to finance their AR because either they're growing or they had a credit blip during this.
Right.
But I don't see rates going up. I mean, I do hope that they keep enough stimulus out there to keep, to get us through to the vaccines and people are comfortable to get out there and do more and spend more. But yeah, I don't foresee them increasing rates over the next year. That's not an official bank promise, but I can't see why they would.
But I think you would advise people to lock in what they can now on their long-term debt so they get those guaranteed locked-in rates as long as they can.
Yeah, because I don't think they're going to go much lower. And so, yeah, I would lock it in.
Well, I hope they don't go below zero.
Me too. But, some of these programs with the stimulus, they only last until the legislation's funding run out. And so if you're considering refining or, financing something long term, the sooner the better because you don't want the funds to run out for the program.
That's true.
I mean, longer than am I debating doing this over the next year, it's, well, when I decide to, will there still be funding for it? Because I don't know how much the Treasury can actually issue debt. Yeah, I think there'll be a couple more rounds of stimulus, but then of some sort. You don't know that it's going to be directed to businesses. It could be straight to consumer. I mean, that's part of what you don't know about this administration's plan is people are talking, well, if they run out of PPP money, they'll just replenish it. Well, you don't know that. It could be direct to consumer. And so if you are a business and you're looking to fix your interest rate and your cost or want a long-term deal, I would say get it while you can. I mean, because you don't know this administration is going to be as, small business focused as we were set up through 2020.
Yeah.
It could be. It's just no guarantee.
It could be, and it's, what was tacked on with this $1.9 trillion, I'll call it a stimulus plan, is the $15 an hour minimum wage across the board increase. So that's whether that stays in the bill, I don't know, but that's we've seen that in over 30 states so far. Where over 30 states have passed this push to 15. So if they do that on a federal basis, it'll take care of the rest of the states. And in the state of Florida, we have the benefit of the tip credit, which this federal bill does not do that. So that'll really punish businesses even more so.
Yeah, and I read last night, I don't know if you saw it, that the Walton's family net worth dropped by $13 billion yesterday because Walmart agreed to a $15 minimum wage.
Yeah, and there's been a lot of discussion on that.
Businesses doing it.
Yeah, we see the big businesses already moving up on the minimum wage, and what really happens, a lot of people are saying, is that the big businesses will survive, the big boxes will survive, but what that does is it just really crushes the small business. If you're in the hospitality industry, if you're a restaurant and you pay tip wages, then it's going to change that business, and there's going to be a lot of businesses that just don't survive it. So it's not a good thing. It's another example of government intervention. So we've got all the stimulus money out there. We've got the $15 an hour kind of teed up. We've already seen it in states. We hear the talk about just forgiving student debt. So it really makes you wonder, where does it stop? I mean, you just can't keep writing checks.
Yeah, I mean, I think Biden said he wasn't going to cancel the student debt yesterday. I did read that, but if they increase it's kind of the thought on the stimulus as a whole. If $15 is approved, and if we let businesses fail because we don't, stimulate the economy, how's the tax revenue going to be there to pay it back? So I think you have to walk it back slowly. I don't think you can just cut it off because, you need these businesses to stay alive, whether that's through what they can pay in wages or just outlast the virus so that, they're a tax engine for the government in the future.
Yeah, you got to have these businesses survive. You got to have them productive to paying normal taxes, and they've got to be incentivized to work and to generate revenue, not just for themselves, but to generate businesses and jobs for their employees.
Yeah, I mean, a lot of people, as far as not an income tax state, but what the businesses pay their people, they have to pay a federal income tax, right?
Exactly.
And so, you want as many people employed as you can. And I think that you have to do that by keeping as many businesses open as you can. And while it may not make logical sense in a statement to say you need to reduce taxes or keep taxes low to pay off the debt, I think you do, because if you shut down the engines to generate the tax revenue, and you just have a few, you can't tax them 100%, right?
Exactly. So go back to the Lafleur curve and look at that. So Lafleur was one of the economic advisors for Ronald Reagan during his term. So that's a subject for another day. But Myles, anything else you want to touch on with Capital City Bank, with the banking industry, and what we're seeing right now on the money side of our economy?
I would just like to say, if you have a bunch of AR because your clients are taking a little while to pay you and you need the money now, give me a call so we can look at financing that so your business can continue to grow and you can pay your people.
Good. Myles Bradley with Capital City Bank. Thank you so much for being our guest today. It's been a great show that we've had today. I hope that we've brought some great information to you on the PPP loans, the SBA 504, the 7A. If you've got any questions, drop me a note in the comments and we'll get you an answer. I am Charles Musgrove, your host of Answers That Count. Thank you so much for joining us. Again, hit the subscribe, hit the like button. We'll be